If you are a gamer, you know. Take-Two Interactive as the creator of Grand Theft Auto and NBA 2K. But if you are an investor, looking at the financial filings from 2021 through the latest Q2 Fiscal Year 2026 report, released in late 2025, you see something different. You see a company that is coiled like a spring, compressing energy for what might be the largest release in the history of the entertainment industry. Today, we are going to walk through the financial evolution of Take-Two, analyzing why their current net losses are deceptive, how the Zynga acquisition has fundamentally changed their cash flow profile, and why management's specific guidance for fiscal year 2027 is the single most important signal for your portfolio. To understand where we are, we have to look back at the transformation that began in 2022 and 2023. The acquisition of Zynga was a massive bet over $12 billion. At the time, critics said they overpaid. The financial statements from that period show a massive spike in amortization of acquired intangibles. This is a non-cash accounting charge that has dragged their GAAP net income into the red for years. If you only look at the headline net loss, you miss the story. You have to look at net bookings and operating cash flow. Fast forward to the most recent data, the second quarter of fiscal year 2026, which covers the period ending September 30th, 2025. The numbers tell a story of a beat and raise. Net bookings hit $1.96 billion, significantly beating their own guidance of $1.7 billion. This wasn't driven by Grand Theft Auto 6, not yet. This was driven by the core engine. NBA 2K26 outperformed expectations, and the mobile portfolio grew in the mid-teens percentages. This proves that the Zynga thesis is working. They have successfully diversified. They are no longer just dependent on one big console release every 5 years. They have a recurring revenue machine that churns out cash while they build their masterpieces. Let's drill into the Recurrent Consumer Spending, or RCS. This is the money players spend inside the games. In Q2 fiscal 2026, RCS grew by 20% year over year. This is the lifeblood of modern gaming. It means players are sticky, they are engaged. Even Grand Theft Auto Online, a game that is over a decade old, is still contributing significantly, although it is declining as expected in anticipation of the next installment. This decline is not a weakness, it is the receding tide before the tsunami. Now let's talk about the elephant in the room, Grand Theft Auto 6. The financial documents don't just give us hints, they give us a roadmap. In the Q2 FY26 report, management explicitly reiterated their guidance for fiscal year 2026 to reach net bookings between $6.4 and $6.5 billion. But the real key is their commentary on fiscal year 2027. They stated they expect to achieve record levels of net bookings in fiscal 2027, and that this will establish a new baseline. Why does this matter? Fiscal year 2027 begins in April 2026. If the game releases in late 2025, which falls in fiscal 2026, the bulk of the sales and the massive tail of online revenue will flood into fiscal 2027. This confirms that we are sitting on the precipice of a supercycle. We are not just looking at a single year of profits. We are looking at a multi-year step-up in the company's earnings power. We must also address the net loss in the Q2 FY26 report. The company reported a GAAP net loss of $365.5 million. Again, do not panic. A huge portion of this is the amortization we discussed earlier. When you strip away these non-cash expenses and look at the adjusted metrics and cash flow potential, the business is healthy. They are investing heavily in marketing and user acquisition now to maximize the impact of their upcoming launches. The pipeline beyond GTA is also robust. The documents mention titles like Mafia: The Old Country and Borderlands 4. These are major franchises. That would be the centerpiece for any other publisher. For Take-Two, they are just the supporting cast. This depth reduces risk. If one game underperforms, the portfolio absorbs the shock. So what is the verdict for the long-term investor? The journey from 2021 to late 2025 has been a period of investment and integration. They bought Zynga, they streamlined their operations, and they built the most anticipated product in entertainment history. The volatility in the stock price over the last few years has been the price of admission for the growth that is about to arrive. As we move into 2026, the narrative shifts from investing to harvesting. The fiscal 2027 guidance is not a hope. It is a mathematical projection based on a product they have been polishing for a decade. For investors, Take-Two represents a rare asymmetric bet, a company with a stable, growing floor provided by mobile and sports, and an uncapped ceiling provided by the cultural phenomenon of Grand Theft Auto.